So here in this video, we will go over what to expect out of markets tomorrow, Tesla stock, the technicals, the option activity, everything that we normally cover. But one thing in specific, I think is very important. And the sooner you know this, the better. We are looking at the potential of a gray swan event or black swan event that could be coming to markets. So let's start with just that, this potential gray swan or black swan event. You already see this starting to affect stocks today, and I think to a lesser extent yesterday as well. Although this could have played a role to yesterday. Yesterday was really about your semiconductors, the Biden administration, and the potential Trump administration, both kind of taking the same stance against China and semiconductors. Now, we're not going to rehash all of that, but keep in mind this uncertainty around semiconductors and potential policy is not over with. It's going to last a long time. It's going to be with us for many months, and that could actually have some impact as well to this potential gray swan event. Now, first and foremost, for anyone that does not know what a gray swan event is or a black swan event, it's very simple. A black swan event is something that comes out of left field that has a big impact that is very negative. For an example, the global financial crisis was a black swan event. Everyone knew there were some problems, but we didn't know they were as deep as they actually were. If you ever watched the movie The Big Short, it was the derivatives market, the betting behind the scenes that like 10x'd the mortgage crisis, because only about 10%, 11% or so, if I roughly remember these numbers, of mortgages actually went bust. But there was 10x roughly the notional value of those mortgages that was actually betting on them to succeed behind the scenes. So that was a big problem. It was a black swan event. Nobody's seen it coming, or only a select few instances, people in select instances. Now, another black swan event was COVID. COVID was a black swan event. Some people seen it coming. I knew in January that could have been a problem. And, Boston Puts profited pretty nicely upon that event. But even I didn't expect it was going to be that bad. That was a black swan event by definition. Now, a gray swan event is something that we all know is possible, but unlikely. That could be negative. Now, the effects of this are typically smaller than a black swan event, but still very negative, specifically for equity markets in this instance. So a gray swan event perhaps was the banking crisis back in 2023. A gray swan event perhaps could have been 2022, when we all knew the Fed was going to start raising rates, but they really started to raise rates because inflation started going much higher than we thought. These could have been instances of gray swan event. Well, we have a new potential gray swan event, and that is Joe Biden stepping down from the presidential election. It was reported today, as per Axios, that top Democrats suspect that Biden could drop out of this presidential election as soon as this weekend. Now, for better, for worse, who likes him, who doesn't, what side of the field you're on politically, it does not matter. This will spark more uncertainty, because who's going to take Biden's place? I'm sure it's Kamala Harris, since she's the only one that has access to the funds that have been raised in the Biden campaign pool, which is over $200 million. Now, with that said, Kamala Harris is going to start announcing maybe what she wants to do different, going to start setting her potential policy path forward if that is what does actually happen. Now, I do think part of the reason we have not seen a lot of political pressures on markets so far up until now is because Biden's already the president. Trump was the last president. We kind of already know what to expect from both of them. And as of lately, actually, the markets have been pricing in a Trump win, which has been good for small caps, overall good for markets. especially interest rate sensitive stocks, cryptos, basically everything besides semiconductors have benefited from the last couple of weeks pricing in a Trump presidency. Now, Biden stepping down could lower the odds. I would expect it would lower the odds of a Trump landslide victory to, more of a toss up potentially. Whether or not that happens, I don't think Kamala Harris is going to ultimately win if that is, who does step up. But the markets will look at it like, hey, maybe all this pricing in of good things for equities that we've been doing, maybe a Trump presidency, perhaps, maybe it doesn't happen. Maybe it does. It's just a lot of uncertainty. Now, during normal election years, you tend to get a correction of about 13% in markets. So some years are more than that, some years are less than that. The correction usually takes place in October, almost like clockwork. Now, so far this year, we've only seen a 6% correction, and that was back in the spring. That was in April. That is normal. Usually you get a small correction in the first quarter or the start of Q2 around springtime, and then the larger correction right before the election. But this could actually speed up the correction quite a bit if Biden were to step down, because again, now you're throwing a lot of uncertainty onto markets. And as I've said many times before, the markets can handle bad news. They cannot handle uncertainty because, how do you forecast uncertainty? How do you forecast for the unknown? It's impossible to do so. So again, for an example, if you get bad news, you know exactly how to price that in and forecast for that, appropriately price in that risk. If there's uncertainty, and the more uncertainty, the worse, then you may be completely wrong in your forecast. They may be way too low, way too high, earnings estimates, economy expectations. Just look at the tax rate between what Kamala Harris likely wants to do, keep it in the 20s, or what Trump wants to do, drop it to the 15s. That makes a huge difference for corporate profitability. So I actually think from that metric, from that standpoint, if we think about the correction that usually happens in October, it could happen a lot sooner, potentially the second half of July, like right now, or potentially, the vast majority of it in August, and maybe spread throughout September. I don't think it would be a straight down move, but definitely start a downtrend for markets. Now, I think whether or not we do get a sharper fall really comes down to earnings. Again, there's good and bad news there. Big tech has really fallen a lot recently. That was specifically the area that I was concerned with for your big tech earnings, really this earnings season in general. And well, they've fallen quite a bit. So I think there's less potential downside now for these big tech names heading into earnings because they've already priced in a little bit of a fall, right? And that's obviously going to affect estimates also. And then you have the economy issues. Initial jobless claims came in today at the highest level we have seen in a year. Last week, the claims came in lower than expected, and Wall Street said, hey, that was just, summer seasonals where, these claims tend to rise. And now they're rising again. Now initial jobless claims, but also continuing jobless claims is now hitting the highest level that we've seen in the past year as well. What's going on in the economy? Could things get worse? These are the questions that Wall Street is starting to ask, and that's uncertainty in and of itself. So you have uncertainty around the election, you have uncertainty around the economy, which will lead to uncertainty around potential earnings. And I think we'll get more clarity on the earnings picture, but I think having political uncertainty and having economic uncertainty is at least enough for a 10% correction from here. Now, is that the end of the world? Absolutely not. Am I suggesting you should sell your portfolio? Absolutely not. I think the bigger concern would be if the economy does start to weaken and earnings expectations do start to fall. That's where you get into a 30, 40, 50% crash. I don't think these uncertainties right now are nearly strong enough to give us anything close to that kind of decline. But perhaps buying a put or two might make sense. And keep in mind, I'm not a financial advisor. I'm not a financial planner. I do have some puts on my portfolio. I've been making them free when I can. I've been trading other stocks to the downside. If you guys want to come join the trading community, check out that link down below in the description of this video. We hit Domino's. That was a big trade, a couple $1,000s from a couple $100s. We hit Vertiv. We've hit a couple other stocks in the meantime, and it's been pretty good for that downside. I mean, we'll see what happens with Netflix today. We do have a trade for the downside as well that we did mainly make free today. But I think earnings are, again, going to be a very large catalyst for markets also. Now, despite this, Tesla stock did very well today. Shocker, right? Tesla's been doing well for weeks now. Not a surprise, Tesla really outperformed today. Some of this had to do with the Megapack contract that Tesla landed today, the biggest one in Tesla's history, which is showing that continued momentum for Tesla's energy products. And there's no other way to put that besides it's very positive, okay? Now, I do think for Tesla as well, kind of like I said for other big tech names, you've lowered expectations a little bit heading into Tesla earnings next week. Now, preferably Tesla maybe trades sideways for a few more days, trades lower into maybe the 240s, and then that's going to give you room for a big upside surprise on earnings, and that could lead to a continuation that could lead Tesla stock much higher. If you take a look at the technicals here, you do have a very short-term bull flag pattern, which does tend to be positive and lead to breakouts to the upside. So if that happens, I would start to target the 280s or so. Potentially this happens by earnings, but you're getting pretty narrow here on the short term. Could suggest tomorrow could be a relatively flat day for Tesla, and then maybe start to get the breakout coming next week. And I like to point this out because Tesla just trades so technically, right? I've never seen another stock like Tesla that trades down to the technicals almost perfectly every single time. So from that standpoint, the odds are really good that we do break to the upside. Now, I do think in the worst case scenario, well, I shouldn't say worst case scenario because there's always going to be another worst case scenario, but in a bad scenario, you fall back down to this trend line here, this longer term downtrending resistance level, which could lead Tesla stock back to about the 225 level or so. And as long as you stay above that, that's just fine. Now, I would actually expect Tesla to move back down to the 225 level if Biden does step down over this weekend, if that does cause a larger drawdown in markets. I don't think Tesla will be immune here. And, let's say that theoretically does happen this weekend. And it turns into a downside pressure on markets. Wouldn't surprise me if Tesla could fall a lot before earnings and then have that post earnings recovery. It also wouldn't surprise me if we continue to see Tesla outperform just like small caps are also doing. Now, IWM is down almost 1% today. It's not an outperformance day for small caps, largely speaking. And this just shows to Tesla's strength even more. Small caps down 1%, S&P down 0.5%, NASDAQ down more than that. Tesla's up almost 3%. Wow. Fantastic day for Tesla stock investors. So I do think if we go through a 10% correction here, I would roughly expect Tesla to fall about 10% as well. Now, wouldn't surprise me if there is a flight to safety, but if we do get a 10% downside move in Tesla, that would put Tesla back to about 230, which, I wouldn't say that's impossible. Would I say that's the most likely scenario? Perhaps, maybe. But it's not a bad scenario if that happens either. It would give people a chance to get back into some Tesla long positions if they're perhaps sitting on the sidelines and did not buy the dip aggressively when we were buying the dip. Now, the first major level to watch on the S&P 500 before we move on to the other topics of this video is 538. Now, I know 550 on the SPY is going to be an important psychological level as well, but the real support level we have is this gap that you've seen here. This was on July 11th and July 12th. You got a pretty clean gap that is aligning with this 50-day moving average at about 538. That's the level that I would target in the very near term if Biden does step down, if the markets do take this uncertainty as bad news, which I would imagine they do. Next stop would be that 100-day moving average at 524. And if for whatever reason we did get down to this 200-day moving average at about 490, I think that's where you're going to see a lot of money compiling back into markets, as long as there's not too much uncertainty around the economy. The economy takes precedence over earnings. It takes precedence over the political tensions. It takes precedence over everything else in terms of potential downside catalyst. So economy continues to get worse. I'm kind of looking at it like this. I'm going to stay bullish as long as the economy stays okay. As the economy weakens, the level of my bullishness is going to fall basically in lockstep with the economy. And that's in terms of a crash. If the economy gets worse, you're looking at a crash. A simple correction I don't think is anything you should worry about at all. And I think at this point, that's all we're looking at. Sven Hendrick on X says small caps up 11% in a week, VIX up 33% in 5 days. And that's a pretty accurate meme, I would say. But back to the point, I actually have this pinned on the X account. If you guys are not following that over there, go ahead and give it a follow. It's Michael Tyler. I post a lot of things from the hedge fund perspective, a lot of analyst notes, a lot of earnings, just all kinds of different things that helps you stay more informed about what's going on in our markets. But I did pin this to the profile here on X. It says 10% SPY correction is coming within the next 6 weeks. Why? Earnings expectations are too high. Now we've started to see some of that, and I did have some concerns then about geopolitical tensions and political, reshuffling, like Biden stepping down, but it was a little too soon to put this out there. This was on July 9th. I mean, from that standpoint, yeah, I think you're still skewed towards the downside. Now, here on the day today, you still only have the same 5 different institutional trades popping up in the interesting flow sentiment, totaling $1.76 million with a positive order value of 19%. But when you actually look at some of these trades, there's a lot of bullish trades coming through. A July 26 260 call for Tesla, that's out the money for next week. July 26 260 call here, both of these worth about $150,000. You have a June 18, 2026 490 call for $605,000. Just all kinds of bullish activity coming through with these individual trades. This one, a January 17, 2025 $300 call for $373,000. It looks like firms are actually positioning for continued upside. And I do think there will be massive upside for Tesla stock throughout the rest of this year. This correction that I think is getting more likely at this point is just a short-term blip. It means nothing for Tesla, and maybe Tesla doesn't even correct. Maybe Tesla just continues to do its own thing. Maybe Tesla's seen as kind of a flight to safety. It's hard to say these things until you're actually going through the correction itself. But I don't think it matters if you're heavily allocated to Tesla. I mean, I don't have any protection on my Tesla position specifically. I'm not fearful of a big decline here. I'm just not. I think Wall Street is still way underestimating Tesla, especially for this upcoming earnings, margins, and overall profitability. Still, expectations are very low. And I think there's going to be a nice upside surprise coming on Tesla earnings, especially if we get new vehicle models that are unveiled to us next week. That's going to be off to the races good news for Tesla. And I will say this again, and I've said it a couple of times here on the channel. I think Tesla will have an NVIDIA moment this year, most likely about 65-70% chance by the end of this year, probably in the last 2 months of this year, November, December. And then there's probably a 25 or 30% chance it happens next year. But relatively soon, the markets are going to realize Tesla is the AI stock. It is the AI trade. If you really want to bet on AI that is going to revolutionize the world and make a specific company a lot of money, that is Tesla. There is no other AI problem like full self-driving cars. I mean, that is the holy grail. As Tim Cook said back in 2017, let me paraphrase, but pretty much quote him here. He says, self-driving cars are the mother of all AI projects, so something along those lines. And that's still true today. I mean, there is nothing bigger than that. And Tesla's actually doing this today. like better than anyone else on a real world kind of mass application basis. It doesn't get better than Tesla. And right now you're in the pickaxe and shovels, if you will, to reference the gold revolution that happened in the US in the 1800s. You're in the picks and shovels era of AI. It will transition into who's applying this AI. And when you look around at that, Tesla is the only standout here. Large language models. Dude, are you kidding? Like, that's what you want to bet on over self-driving cars? It's laughable. It's jokeable. And I think Tesla will have this NVIDIA moment in terms of its stock because the markets will realize, hey, there's not another opportunity like this on our markets. And that could send Tesla stock as high as $1,000 per share, in my personal opinion. Now, some of that obviously comes down to the $27 billion or 105 million shares that is currently sold short against Tesla. That would be hedge funds and institutions heavily getting allocated to Tesla along the lines of how they're allocated to Apple or Microsoft or Nvidia. That would include retail also doing the same, and Tesla really starting to show some exciting momentum in robotaxi. I don't even think you necessarily need a single ride in the books with the robotaxi or to have actually happened to get that kind of excitement. Just market's expectation that it's coming, and as long as we get an actual start date or estimated start date for robotaxi in, let's say, 10, 20 cities, whatever Tesla announces to us, that is what sends Tesla stock well past all-time highs. So, again, with this short-term stuff, I don't want anyone to lose sight of what's actually happening. The next couple of months, the next 6, 12 months. Correction, who cares? Economy, pay more attention to that. If you would like to hedge your portfolio in the meantime, I don't blame you. Make some money on the trades. That's what we do every single day in the trading community. Again, check that link out if you want to down below in the description of this video. Not a guarantee you're going to make money, of course. We lose some, we win some. The ones we do win tend to be some monsters. $40 and a 4,000 last earnings with Palo Alto. Just some, crazy trades that we hit over there. But I wouldn't worry about this too much. Again, especially and really only if you're heavily allocated to Tesla, because Tesla is so unique right now in our markets with so many opportunities ahead of us. If you're heavily allocated to Apple, Microsoft, Google, Nvidia, I mean, yeah, I would be a little bit more concerned that maybe they've rallied too far with too little growth prospects ahead of them. Nvidia, to a lesser extent, things look pretty good from TSMC earnings. But especially those other guys, I just don't see the strong bull case like I do in Tesla. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.